what is up, dudes and dudettes? This is Dudediligence here, and this video is the weekly Patreon request video where my Patreon members asked if I can do technical analysis. You see, after trading so many years, I kind of just like growing a little bit reluctant of technical analysis, even though I'm kind of famous for it, and then my predictions are all right. But at this point, I almost feels like prediction in its own way, it's kind of useless. You kind of have to have a bigger macro understanding of the market to be winning on the trading game or the investing game in a longer run, and you will have a more consistent return that might or might not be the market, but at least your tracking error should be somewhere above where the market return is, especially when you can control the time. So if you want me to do technical analysis on your stock tickers, you're more than welcome to join our Patreon. Our Patreon is only $10 per month, and it's totally worth it. But also, sometimes you can also, if I feel nice enough, I go on the regular Discord main channel and look at, if there's something that everybody is really, looking into or really interested, then I might also do some tech analysis on that one, or maybe feed it to my algorithm and see how that goes. So in this video, we're gonna do 3 stocks essentially. So first one, highly recommended, and not really highly recommended, highly requested from Dude Zero is Tesla. So for those of you who've been watching our video for months or even half a year now, you know that we set up a lot of those support lines way before everything happens. So if you look at this this blue line, you will see that this line has been in our system on somewhere around, I think somewhere around like early January or something like that. And then we believe that this is basically the quote-unquote support line of Tesla. And then when it drops under this line, and when it dropped, like when the dispersion when the price dropped way below this price, will rebound back up to this price. So basically what we did when Tesla had 700, we buy back some, and then we sold it right like about last Friday and everything. There's some considerations into why you sell last Friday, not today, is because increasing uncertainty in the Ukraine places. Elon is playing ball with Putin a lot on social media, and let's see how that goes. And the investigation kind of ended. But in terms of a technical analysis standpoint, essentially the stock is trading below 150 day moving average, and the slope of the $150 day moving average is flattening out. And when you see a stock that have a flattening out effect on a 150 moving average, that means it will have a further convergence with the 15 moving average and with the 5-day moving average, which now you see an exponential growth in a 5-day moving average. That means somewhere around the line, the 100, let me show you guys visually. So it's probably gonna look like this. So this line is gonna trade flat unless the general market is gonna be better. So that creates a upper lock around like here. So what is here? 920, 925. What is this number? Let's just say it's 930. Okay, let's just say it's 930 at this point. Like, let's see, or 920, 930, whatever you call this. So this line is where the deadlock's at. All right, and then basically what's happening with Tesla is gonna revolve this line. Unless the general economic position or the macro sense of the economy is getting better, but as we all know, the Fed is gonna trim its balance sheet. So really depending on what happens with the inflation, Tesla might or might not have another run. But again, this is the most frequent, this is like the very classic Tesla runner-up, like 5-day, and on a 6-day it corrects, and no matter basically if there's any reactionary information coming out, then it will probably trade towards the downside. But if not, when everybody's still in the euphoria, then it's probably gonna go up, but it's probably gonna touch the $1,000 if it ever gonna go up, and then it's gonna go down again, right? Because we all know that 0.25% of the interest rate hike will probably capture from here to here. So let's do this. What's that? Yeah, 1050 basically. So this is like the no-go zone, and then right now we're at the volatile trading up and down. So basically you just need to know 2 line here for Tesla. This is flat, right? let's just do 2 blue lines like that. So it will trade within these range. Okay. Second stock, let's look at MMAT. People panicking, saying, hey, it's time to FOMO buy in $2. Oh my God, it's going to the moon. Probably not. Upper limit 220. Downside limit go back down to $1. Nothing fundamentally changed in this stock. Just retail people buying up, and then it's like retail hopium. Same thing with BBIG. 23% BBIG gapped up. I actually don't really follow what really happens with BBIG. I think we need to look at the moving in Monday pre-market, BT Brent shares move up, the market value of this moves up, blah blah blah. Nothing really that much. Like, okay, so if we go and look at the article, left bring BBIG gain to 22%, are now trading at this. On Twitter currency, some users are rallying around the hashtag BBIG squeeze. Well, the thing is, with this in mind, investors results apparently as the filing was SEC, and then the company shares financial statement for Crypti. Yeah, basically it's like the Crypti thing that we talked about beforehand. It's a public spin-off, and it's basically a Bitcoin play. But the thing is, depending on how Cryptis were valued or were priced the first day of trading, depending on how much it actually becomes, like $1, then this price would drop $1. If it's $2, this price would drop another $2. So what will happen is, if you really believe that, you know, the retail money are rallying up and there's going to be a short squeeze, then you're looking at a very short-term peak gain, right? You see a huge peak gain like in a short-term period of time, and then when a Crypti comes out in trading, all of these immediate gains from this area, from like, I don't know, let's just hypothetically speaking, to go to $4, from $4 to about $3, and from $4 to $2.5, all of these volumes are going to get evaporated, and you will see a small pump and dump scheme again. All right. Third one, or is it the fourth one now, is the oil, which is USO. I don't really do Brent, or I don't do the WTI, because it's very continuous and I have to go into some very interesting spotting theory of commodity trading, and this is a stock trading channel, so I don't really want to bring in commodity trading yet. So in here we see a gap up because, you know, we all know that Sunday night futures started trading, and then you will see that, you know, the entire oil industry actually went up super big today. But whenever there's a huge hike up or gap up, and then you ended up on solid, and then the next day you will see some resistance on the market, especially pre-market. And you know, post-market we see that it's probably gonna hit $80 as I talk about it. I actually look at this, and then when it hit $80, wait a second, I'm not supposed to look at the sun, am I? This is bad. Hopefully it doesn't really do anything to my eyes, but you know, and tomorrow it's probably gonna battle like 83-ish, and it might or might not go down. The only problem with this is $80 USO probably coincides somewhere around like 115 oil price. And then as we always talk about, when it reached 120 is when you should exit, right? Whenever whatever strategy is working, that means over time it's not going to be working anymore. So when it hit 120 again, probably should exit. And again, I exited again because around here I actually bought some calls about 80, and then it's somewhere around my price range. You know, I'm okay with a 50% to 83% return on the option. And let's see what's going to happen tomorrow. And some of you who are smart, you look at the inflation data or have a projection of what inflation data is going to be around this month and next month. You sort of spot it up, whether it's going to go up to 140 or it's going to stay fluctuating around 110, right? Because when oil price stabilizing at 110, that means in the US we probably will see $6 per gallon, and then the US government have to do something about it. And the second rate hike, which means, you know, a medium-term and long-term T-bill, will actually negatively affect the oil price in general. So don't get too hasty and, you know, place all your bets in oil, because right now we're actually in a uncertainty period of time. But if your average is like $64, still safe. And again, a lot of us average is still 64, like even lower than that. It probably can climb up a little bit more because the slope is not in a decline. The slope actually is in a upward trend. All right, this is it for the video. Hope you guys love it. If you guys love the kind of video, smash the like button and subscribe. And again, we're not financial advisors, therefore we do not give financial advices. All right, see you guys on the upside.